Hello, Ellie Cohen here. We see month after month with the Da Vinci robot, nobody's making losses and our profits are going up and up and up. Would you be interested to understand how does the robot manage to do that? In this video, I would like to explain how I understand how the robot is working and how it manages to make these profits for us. The information that I'm going to give, it's not so much based on what I've heard from the developers. I've heard a little bit from the developers and I'm going to use a bit of that information, but it's mainly based on what I see from the results of the robots. We're able to see every trade that the robot does. In my FX book, we see every trade, when it's open, when it's closed. Based on that information, I would like to explain how I understand that the robot is working and how it makes profits for us. First of all, let's consider the case where a trade is opened and then later on it's closed with a profit. So how did the robot do that? So with regular traders, they look at graphs, they do what's known as technical analysis. And they look at the graph, the value of one thing against another thing. With currency, we've got one currency against another currency. You have these what's called candles. These green candles means the value is going up. Red ones means it's going down, right? And the wicks, these lines at the top and the bottom, these are the highest amount it gets to in that time frame and the lowest amounts, right? This is one type of sign that the traders use to understand in which direction is the market going. In other words, they look to see, is the value going to go up or is it more likely to go down? Right? So one thing they look at is candles. Another thing is moving averages. There's these lines that are like the average of the value and moving averages over a short period of time, over a long period of time. They also look at this. They also look at structures known as a wedge structure of the trading or flag structure. There's all various signs that experienced traders look at, and based on that they have an idea whether the value is likely to go up or likely to go down. And if there's a few signs, then it's more of a reason that it's likely to go up or likely to go down, and based on that they'll make a trade. Okay, so the robot, as far as I understand, does a similar thing. That if it sees that there's an opportunity, that it's likely, very likely, that the market's going to go up or going to go down, then it will buy or sell accordingly. So what I've seen from the results, that a trade is open, let's say like here, it sees that the value is starting to go up, it might open a trade, it will buy a currency when it's a lower value, and then when it gets to a higher value, it sells it, right? Or it might do the opposite. It sees it looks like the market is going down, so it sells at the top and then buys at the bottom and makes a profit, right? So the robot, it will make a trade and then it will wait until it's able to make a profit. How long does it wait? So I see that sometimes it waits a few minutes, sometimes a few hours, sometimes a few days, or sometimes even a few weeks. But it doesn't generally wait more than a month. I haven't seen trades being open more than a month. Right? So that's all well and good when things are working out well. That the robot makes a trade and it waits and waits, and then when it sees there's a profit, it takes the profit. Okay? And incidentally, I've noticed that it doesn't take huge profits. When there's a little profit, it will close the trade and make a little profit, right? And I can understand why it should do such a thing, because if it were to wait to make a bigger profit, it could be that the market would change and it could end up having to close the trade with a loss. So that's one of the strategies I see just from the results, that the robot takes a small loss, a small gain rather, in order to make sure to make a profit rather than having the risk of making a loss. Right? So that's one strategy. So it's taking the small gains and it waits. It does. If the market starts going in the wrong direction, it will wait and wait and wait. and then when it starts going back in the right direction, it will close the trade with a profit. Okay, that's all well and good when things are going well, right? What happens is, let's say over here, the robot sees that the market value is going up, and let's say it buys over here and is waiting for it to go up a certain amount, and then all of a sudden it starts going down. The value starts going down. So what does the robot do then? The value is going down and down and down, and if the robot closes the trade, it will close at a loss, and sometimes it could even close at a big loss if it were to close that trade. So what does the robot do? Right? So I've seen that the robot applies a certain strategy known as martingale. It's a martingale strategy. Now, I'm going to explain what the martingale strategy is, and I'm going to explain how it's used by other trading robots, and then I'm going to explain how I see that the Da Vinci robot does it, right? Because there's an important difference between the two. First of all, what is the martingale strategy? Right? So to understand it, I could give an example of, let's say somebody flips a coin, right? And let's say they put a bet that if the coin is heads, it wins; tails, it loses, right? So it puts in a bet, let's say of $1, right? And it flips the coin, and it ends up as tails, right? So they lost. They'll lose $1. Now, how can they make sure to get the dollar back? They put in another bet of $2 the next time that it should be heads, right? So if the second time it will be heads, so then they'll win an extra $2. Let's say double the amount that they put in. So then they put in $2, so they get back 4. It comes out that they put in 2 plus 1, they put in $3, but they get back $4, right? So they make an overall win, right? But let's say if again it's tails, so then they double the amount. They put in $4, right? And again, they flip the coin. Let's say it comes out again tails, right? So if they would, if they would have won, if it would have come out heads, they would have gained a $4. So they'd have got $8. They would have put in $4, $6, $7 and got back $8. They would have made a profit of $1, right? If it would come out heads. But let's say it comes out tails, they make a loss again. So how can they recuperate this loss? The next time they put in another bet, let's call it, of double the amount again, $8, right? Now, we can understand that with flipping a coin, that it doesn't usually happen, so many times it's tails, tails, tails. You know, sometimes it's going to be heads, right? So the idea is, the premise is that eventually it will be heads, and then they'll recuperate all their losses with a bigger bet, right? Now this is called the martingale strategy, right? Now it sounds very good. It sounds like, you know, it should be that in many situations that you end up with a win. And let's apply it to trading. So a trade is opened for the value to go up, but then it starts going down. So then another trade is opened with a bigger value, let's say double the amount, and then another trade with a double of that, and another trade of double of that. So eventually the market, the direction of the market is going to change, and then all the losses are recuperated because overall a big gain is made. Right? That's the idea behind it. Right? Now what's the problem with this? The problem is that according to statistics, over a long period of time, it is possible for there to be a very long series of tails. There was once there was once somebody who gave there was a certain research done, and an investigation was done, and a few people were given the task to flip a coin and to write down the results, whether it's heads, tails, and they had to write down, they had to flip the coins, something like 200 times, and to write down the results, right? And so there were people doing this, right? And there were some people that cheated, right? Why do they need to flip the coin? They just write down heads, tails, tails, heads, tails, tails, right? They just cheated the results. And somebody came to examine this, and he looked at the results, and he was able to look at the paper, and he was quickly able to see this person cheated, this person didn't cheat, this person cheated, this person didn't cheat. How did he know? Because if he saw that there were some results where there were 6 or 7 heads in a row, or 6 or 7 tails in a row, then he knew that that person did not cheat. But somebody who cheats would not write out 6 or 7 heads in a row, because they think that, it's random, you're not going to get 6 or 7 times in a row. But statistically, it does come out that way, right? So statistically, there can be a lot of negatives, right? So let's say going back to the case of flipping the coin. So what would happen? Let's say it keeps on being tails, 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 and then the value the person has to put in, it keeps on going up until until he ends up putting huge values, huge amounts of money, in order to make a gain of $1. Right? Now there are a number of trading robots, EAs, that follow this principle for trading, and they follow it to the end, right? And what happens that for a long period of time, a number of weeks, a couple of months, so the trading robot can be earning very good profits, right? Because even when the market goes in the wrong direction, so because of the martingale method, overall it will make a profit, right? But eventually there will come a situation where the market keeps going continuously against the direction that the robot, the EA, thinks it's going to go in. And then the EA is going to make bigger and bigger trades with the person's account until eventually it's used up all the money in the person's account, right? And all the money's been used up, and then it still carries on going in the wrong direction, and then that's it. They've lost their whole account. That is what is dangerous about the martingale strategy. And that's why when people hear about EAs, sometimes you hear that an EA, it blows a person's account, and a number of times it's because of the martingale strategy, right? If it's used absolutely to the end, so then people can end up losing the whole account. Right. Now this is with other EAs. What about the Da Vinci robot? How does the Da Vinci robot work? Well, if you look at the results, and I've examined the results, and what I see is like this, that when it puts in a certain trade, and then the market goes against that trade, and the trade starts making a loss, so then it waits, and then it will put in another trade. And the other trade, it won't be double the amount. It will be half that amount again. Like if the first trade was $1, the next trade will be $1.5. Right? So it's not doubling. That's one thing I noticed. Right? And And if things go well, you know, it might open another trade, the third time, fourth time, or fifth time, and then starts going in the right direction. So then the last one or two trades could end up having a big profit, and overall for those 6 or 7 trades, overall there would be a profit. That a number of those trades would be in the minus, that there'd be a loss, but a couple of them will be a gain, and maybe one or both of them will be a big gain, and then overall there'd be a profit. Okay, so that's a way that the trading robot, the Da Vinci trading robot, seems to be using some type of strategy based on the martingale method in order to overall make a profit. And if any of you want to check this, just have a look in my FX book. If you look to see trades that are closed in the red, you'll probably see that there's a number of trades closed at exactly the same minute, and some of them will be in the green. And if you look overall of those trades all closed at exactly the same time, you'll see that overall it comes out a profit. Right? Now that is what usually happens, and I've seen this a number of times with the trades. However, I've seen a few times that it's ended up with a loss. Right? Not a huge loss, comes out 0.1% or 0.2%, 0.3% a loss, but it ends up with a certain loss. Now what happened over there? Why did it end up with a loss? So what I see over there is that the robot does not use the martingale strategy right to the end. It doesn't keep opening up more and more and more bigger trades. It will open up 4, 5, maybe 6, maybe 7, right? But it doesn't keep going and going and going. And so therefore, it doesn't end up blowing our account. It doesn't end up using all the money in our accounts. Right? It will try to end up with a profit, but if over a period of time it sees that it's not getting that profit and time is going on, so it will be prepared to close those trades with an overall loss. Right? Now, because each trade is not such a large amount of money, so the overall loss won't be such a huge loss. You know, as I said, it might be 0.2 or 0.3%. And it could be that there were other trades that were successful that day, so that overall that day a person could end up with a profit that day. But what I see is that the Da Vinci robot does not continue the martingale method right to the end. And I've heard this also from one of the developers, that he said that they do use the martingale strategy, but he said not unlimited, and he stressed that. In other words, it's used in order to try to end up a whole load of trades, to end up with an overall profit. But if it ends up that it doesn't manage to do that, the robot is prepared to take a loss, and in that way we don't end up losing all the money in our account. Now, all the information that I'm saying now, it's not, most of it is not what I've heard from the developers. A little bit, yes, but most of it is based on the trading results that I see in my FX book of the trades done by the robot on my account. And you're welcome to have a look in your own accounts to see if what I'm saying makes sense. Right? And we hope that the robot continues to function in this fantastic way in the future, and that we continue to make wonderful profits from this amazing trading robot.